You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market, from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody, that rockin' tune means it's time once again to rock out with the option block, your bi-weekly source for all things options related. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. You guys know the drill. Follow us on the old social medias at Options, pretty much on every platform that's worth a darn out there, as well as, of course, find our content via the iTunes or the website, and, of course, wherever you listen into this. If you haven't already done so, make sure you hop on over, upgrade to the full network feed, and if you're so inclined, maybe you want to leave us a review. A nice little boost of ratings, always good for the old machine that churns out recommendations on those different platforms. A lot of voodoo goes on there, so if you want to send a little love our way, we wouldn't hurt it. If not, say la vie. We'll blame the Rock Lobster. That's what we always do here on the old show. And, of course, for those of you out there who can't even be bothered to wait until the podcast is available on those platforms, we got you covered over there on Mixlr, MIXLR. Grab that link, set it and forget it. You'll know exactly when we go live. This show, it's every Monday and every Thursday, 3 p.m. Central, 4 p.m. Eastern. Again, you can check it out there. And if you can't wait, if you need to have it in your ear holes now, got you covered. Otherwise, it's on all the major outlets. And, of course, however you listen, live after the fact, make sure you send in those questions, those comments, those pearls of wisdom. We do, yes, we actually do like to hear from you guys. And joining me on the old program today, we got, let's go out in order. Let's go in some weird, let's just see how they are on my screen right now. Starting off with he who's usually out there in St. Charles these days. Who knows what the heck he is. He's moving and shaking, rocking and rolling. He is Uncle Mike Tussaw from RCM Wealth Advisors. Uncle Mike, welcome back to the show, sir.
The styling, profiling, limousine riding, jet flying, kiss stealing, wheeling and dealing son of a gun. You may not like it, but you better learn to love it, because it's the best thing going today. Woo!
Wow. You had your coffee today, sir. I like it.
I'm excited for the big Ric Flair 30 for 30 coming tomorrow night. I can't wait.
Oh, there you go. You are a bit of a
That was exciting.
I never got into the Ric Flair era. I knew the Hacksaws and the Andres and the Ultimate Warriors and the Hulk Hogans. Ric Flair, for whatever reason, never really made it on my radar. But I know a lot of people, big fans of the late lamented Ric Flair. So there you go. If you're into it, then Uncle Mike's with you, and he's feeling your pain. Speaking of feeling your pain, you're also joined by the greasy meatball himself, Mr. Mark Sebastian from Option Pit via Carmen Line, hot off the presses, straight back from the madness that is the Traders Expo in Las Vegas. Welcome back to the show, sir. And how was the madness in Las Vegas?
Well, let's start with the fact that Ric Flair isn't dead. He's still alive.
I thought he died.
No, you're thinking of the Macho Man. You're thinking of Roddy Piper. They're all dead. You're thinking of Ravishing Rick Rude.
I thought he just passed away.
He's pretty sick, but I think he's still alive. That's my understanding. I think he's got some issues, but he's not dead yet. No, big fan of Ric Flair. He used to come out to 2000. Was that him that came out to 2001, or was that the Macho Man? It was one of them. But the Nature Boy was the best. And yeah, Las Vegas Expo was awesome. It was a lot of fun. Got to meet some famous people. A couple of big fans of the podcast were there. And, that was a great time. And then, yeah, I'm back and I'm tired and I've got most of the family is sick except for myself. So welcome home. Enjoy everybody being sick.
Always a fun homecoming. I'm looking here and it's a big headline. Ric Flair says, "I ain't dead yet, MFers." So there you go, from September. So apparently he was still kicking as of September. So there we go. My assumptions of his death were greatly exaggerated. All right. With the team assembled and Ric Flair apparently alive. So there you go. Good news for all you wrestling fans out there. Let's get rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. This is indeed the portion of the show where we break down what was moving, shaking, rocking, rolling, catching our eye in today's market activity. Mostly green on the screen, pretty much green across the board, all the major indices, including ye old fear index. We'll get to that in a bit. But yeah, most of the major indices slightly up on the day. S&P kind of the Goldilocks of the bunch, right in the middle of the crowd, up about 0.2%. And the tech-heavy NASDAQ getting a little more of a lift, up about 1/3 of a percentage point. The Dow, ever the laggard, only up about 0.1%. And surprisingly, all this green, we're still getting a little bit of the weekend put back in, and guessing then some. Got about 1/3 of a handle up here in the VIX cash, getting up to those lofty, crazy, just ridiculously stratospheric 9.5 levels. You guys, of course, know that we hit new lows out there, uncharted waters out there on Friday out there in VIX. Let's see how low we got today. Got down to a low of 939 intraday today. So today was not the low, but of course, on the close, actually, 9.14. We did hit intraday, which is even perhaps more terrifying and interesting. Did hit intraday on Friday, 8.99. So all of you out there who've poo-pooed on our polls for the better part of this year, we've asked you this question multiple times, who've poo-pooed, are we going to hit an 8 handle in 2017? I'll have to see if I can dig up some of those results for you while we're doing the show here. But I know a lot of you voted against the notion, even the concept of an 8 handle, and lo and behold, we did see it on Friday. 8.99, ever so briefly, ticking into the 8 handle before closing 9.14. So let's start there, Mr. Meatball. What make you of these ever new lows out here in VIX, and the fact that we're seeing the much watched 8 handle finally?
Yeah, I mean, if we sit here, we're going to see an 8 handle because VIX doesn't even include Christmas and New Year's yet. When those come on, you're going to see a further dip, and so it's entirely possible, if things stay the way that they are, that we will see a VIX of in the 8 handles. I got asked over the weekend while I was in at the expo, hey, where could VIX theoretically get to? And, this is my question. I'll tell you what my thoughts were. But, what I said, if volatility went to 1, which is the absolute low, really, volatility of 1, maybe you could see a VIX of, 4 or 5. But in reality, if with kind of the absolute lows that we've seen over historical 20-day volatility, I would say that a 7 handle is about as low as that thing could possibly go. If there's a time for that to happen, now might be the time. We've got this, I've been kind of thinking about why we've been able to get all these consistently low VIXs. And I came up with kind of a theory. It's the fact that with all these expirations, I think we talked about this on Vol Views, maybe not on this show, but in the month of November, there are 22 trading days. 14 of them have an S&P 500 expiration. One of them has 2 expirations. That is how much. So now I've got a scenario where if I'm hedging, there's all sorts of places to spread it out. There's already volume on the Friday weeklies. There's volume on the quarterly. There's volume on the standard AM. There's now volume on the PM. And now you've got these Mondays and Wednesdays that are starting to pick up. So we've now spread all of the hedging. Meanwhile, most of the put writing, most of the premium selling, at most is done on the weeklies, but is generally done just on that. Most people target that third Friday, and that is that is the big day they are selling. So I'm wondering whether, we've got all of the selling pressure on one contract and all the buying kind of spread out. Maybe that's not what's driving VIX lower, but maybe that's what's allowing VIX to get as low as it is getting and consistently staying that low. So that's kind of one of my little theories I've been working on. I love your thoughts and love your thoughts on where you think we could theoretically go.
Yeah, you're right. We have debated the theoretical lows in the pure theoretical low, which I know Russell just did his crazy experiment. I think it was at 1.4. So I'll have to look up the exact number. It was 0.4. It was a fraction, a decimal. That's a theoretical low if you set everything, all the bids to zero, effectively out there, and all the relevant options in VIX land, how low it could theoretically get. But you're right. Practically, I think we've said before, structural volatility around a 5. I think in this market, a 7 probably makes a lot of sense. Speaking of this market, I was looking up while you were talking, because I know we have asked you guys many times over this year in our various questions what you think about the state of VIX. Could we hit those levels? I was able to dig up a couple of them right here. And back in August 10th, we asked you guys, VIX at the time was at a comparatively meteoric, stratospheric 16.17. We said, hey, on that week, what do you think has the best chance of hitting first? VIX into the 20s, or at least north of 20, or back in the single digits. Over half of you said north of 20 first. Obviously, that didn't materialize. So 28% of you who said single digits, you were on the right fence there. We also asked you guys about a month ago. We were flirting with some new lows out in VIX land. Again, we asked you, hey, for that week, have you played crystal ball along with us? Where will we close? The close we were having you guess was for Friday, October 6th at the time. We asked you, it was right around 9 to 9:30 range, which is where the VIX was. Was it going to be lower, aka lower than 9, 9.5 to 9, or 9.3 to 960, or higher than 960? About a third of you picked that, and ended up being lower. But yeah, so far, the 8 handle, I think, has surprised a lot of our listeners out there, which is kind of interesting, as well as a lot of our readers. Uncle Mike, has it surprised you? And what else is catching your eye out there, sir?
Going into this year, I remember how we were saying, I think it was Russell's quote, how Donald Trump is not a single-digit VIX president. And, thus far, he really has been. So I have to admit, I'm definitely surprised with it. As we got going, I think I was even in the camp that did say, I came to the party late, but I think I did say that I thought we could get an 8 VIX. And I'll even continue to say that I think, in addition to everything that Mark was saying about the way that options are spread out, combine that with the fact that if we haven't had the headline risk to have the VIX go higher yet, I really don't see what we could possibly do to get it in any near term. So I would not be surprised if we got down to a 7 VIX, quite frankly. And by the way, never before in the history of the entire stock market has there ever been a better time to sell than right now. We did make new all-time highs today in the S&P. We did not quite get to the 2,600 mark, but we are definitely within, and we're definitely very close to it. So got to close at 25.91 on the day. So combine that with everything else, and I don't think a 7 handle on the VIX is totally out of the question. Today, for the most part, what I was seeing, we had a flat market for the most part, but the sector that was driving markets higher was definitely energy. XLE up over 2% on the day. Oil, looks like it's on its way to 60 right now. It had such a hard time getting above the 50 handle for so long, and now that it's above the 50 handle, it's definitely kind of been going at a vengeance, headed for 60 as its next stop, especially over the course of these last couple days. I believe we closed 2 trading days ago around the 54 level. Today we're closing above the 57 level. So there's been a lot of movement in energy over the near term. Apple came back a little bit today. It had a little bit of a pullback after the earnings surge the other day, but today it's up over 1% again. Just kind of going over a couple other things on our radar. Silver, SLV up a little over 2% on the day, 1627 close on the day. So there was a lot. There were some things going on today just in select spots. But overall, just looking down the sectors, for the most part, the sectors in the marketplace were relatively flat, with energy leading the way today.
I just put out a little flash poll here. We'll get some of your thoughts here. For those listening live, and of course, after the fact, it'll be a little bit too late because it's just going to be going during our show here. To ask you, will we see a 7 handle this year in VIX? So far, the early votes all 100% to the no side. We'll see. It's early going. We'll check back in as the show progresses. Since we're talking VIX, we'd be remiss if we did not mention one of the big names popping off tomorrow before the bell is indeed the CBOE. When you talk CBOE, it's kind of hard to. They pretty much got a handful of products that are lighting it up, and mostly VIX and SPX to a degree as well. So those are the big names, and much of the run-up we've seen, and has been a substantial run-up out there in CBOE over the past year, has been driven on the strength of that VIX complex. In fact, this name has pretty much almost doubled over the past year. It was trading about 60, low 60s about a year ago in early November. Fast forward to today, it's right around 114.5 heading into earnings. They're pricing in right now about a $3.75 straddle, so right around 3%, a little bit more than 3% there. So interesting move. They're pricing in there. Not a huge rocker roller mover compared to certainly like a Netflix or an Amazon or some of the other high flyers out there. But if you're looking at VIX, you're talking VIX. You got to be talking CBOE, and they're popping off tomorrow, so I'll be curious what you guys think of that. Also, another name you guys like to pay attention to, also popping off tomorrow, is good old Snap, the one everyone was asking for right before they went public. Hey, when could we get our hands on some Snap options? You guys are all fired up on them, and it's doing decent volume, probably a bit of a earnings surge to this, but it's trading about 82,000 contracts a day of late, so it's a decent number, particularly for a $15 name. It closed shy of $15 today. They have earnings after the bell tomorrow. They were pricing in about $2, so a little more than 13% out there. Mark, any of these names lighting it up in your pitch chat today? And what are your thoughts here of CBOE at these levels, given what we're seeing out here in VIX land?
$26 a share, that's astronomical. You people are insane. Go back across the street. I quote CME Group about six years ago.
They weren't the only ones saying that. I know when it hit 60 for me, I was like, man, $60 for CBOE seems a little rich, and here we are 2x that, so say love it.
I mean, has any company made more money off of our president than the CBOE? I mean, that Ed Tilly should be writing campaign checks for Donald Trump, because every time that man, Donald Trump, opens his mouth, 10,000 VIX futures trade. It is unbelievable. I kid, obviously, but yeah, they're doing really well. SPX, the daily SPX stuff, all of kind of that stuff has been really beneficial. The fact that they've cornered the market on the Russell 2000, I think, is to their benefit. One of these days, they'll figure out how to make a different VIX index trade. So far, no good, but they'll get there at some point. But you got to wonder how much more upside CBOE has. But that is one we are definitely watching and enjoy trading, and catches a lot of activity from my peeps.
From the old peeps. Gotta love the peeps. Yeah, it's a crazy one, and you're right. They did think that was too rich for their blood, and fast forward a few years, who'd have thunk it in this just ever-eroding volatility environment that VIX would continue to keep printing crazy numbers out there. So many contrary things going on this year that is not what anyone anticipated when the year started, and even if they did anticipate this environment, they didn't expect it to play out this way, and yet that's exactly what we're seeing. So a lot of surprising head-scratching firsts this year. Maybe we'll find a few more and we keep on rolling right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. That funky music means it's time for the funky part of the show. It's time for the Odd Block. The weird, the wild, the woolly, the whimsical paper that was catching our eye today. We'll start, as we always do these days, in the crazy land of good old, just, I don't know, call them what you will. We like to call them crazy Tesla catastrophe puts. You guys may have another name for them, but they continue to light up. In fact, I was having a conversation about these with some people this morning, and people continue to be mystified and amazed that there's so much interest and OI on such a seemingly negligible strike. Yet that continues to be the case. A little bit light today, only 70 contracts. Again, if you're not familiar somehow, Jan 2019, 50. Yes, 50 strike puts out here in Tesla. OI pushing the 33,000 level now. So number one with a bullet out there in Tesla land. May seem hard to believe. So many options, so many people talking about and trading Tesla options. Yet these are the trade du jour. Just broke 30,000 a week or two ago, already up over 33,000. A little more action out there in the pars as well. The Jan 2019 100 puts, about 140 of those going up. So it could be. And we had on Ophir, we speculated ourselves as well. Maybe there's some ratio action going up on these. 140 by 70 going up today on these strikes. I'll leave you guys to make your own conclusions. But it wouldn't surprise me if some of this later paper had a little bit of a ratio flair to it out there. You guys got thoughts? Hit us up. You guys already have in spades on this issue. But if you have other thoughts on these, by all means, send them our way as we move on in to our first name here on the old odd block, our first official name, actually. This is our old friend Marathon Oil. We've talked about this one a lot this year. It's been a few months, I think, since we've checked in on good old MRO. Closing today, $16.33, up about 5%. So a good day out here in Marathon land. So the name that puts up about almost 12,000 contracts a day. Today doing a wee bit more than that, 67,504. Pretty much all that action on the call side, 17, nearly 18 to 1. Calls over puts. You don't have to look too far to see exactly what was lighting it up today. Just scroll on out to the weeklies, in particular the NOV 24 expiration cycle. Well, you will find the 16 calls out there that were lighting it up to the tune of about 35,000. That was the big block that caught our eye. 35,000 of these NOV 16s lighting it up. Paper pretty much lifting the offer for 50 cents as the day went on. A total of nearly 40,000 went up on this strike. All of it opening, only 39 contracts open on this strike. So it does appear to be what it looks like on the surface, straight up opening sizable weekly call of here in Marathon. So it's notable for a couple of reasons. Obviously the size, the duration is also fascinating. We don't see a lot of this aggressive size playing in the weeklies on the upside. Usually it's a little bit longer term. It's also post earnings, which is kind of interesting. You might see some of this positioning ahead of an earnings announcement, but they announced earnings just like back on the 1st or so. So they already are in the rearview mirror for these guys, and they've had a good run since then. The name's up a couple of bucks since the earnings announcement. And also the strike selection. These are effectively in the money calls, certainly after today's move. Maybe when they were negotiating this before the trade, these were out of the money calls. Now these are in the money calls to the tune of about 33 cents here. So a lot of interesting and or weird things to be seen in this name. Let's go back and look at the year that's been out here in Marathon. This name has kind of been all over the board, getting as high as nearly $20 back in December of last year, then kind of taking it on the chin throughout much of this year, as a lot of the oil names did, getting down to a low of somewhere in the 10 and change level before rebounding in late August and pretty much getting up to where it is right now. Again, 16.33 to close out today. So it's been an interesting run out here and in Marathon. Someone, Mr. Meatball, appears to be betting that this run will continue. And they're doing it for size, they're doing it in the money, and they're doing it in the weeklies. What make you sure of this Callpalooza in Marathon?
Well, I mean, it appears that they want an exact duration, and they definitely think it's going up. And, if you're going to do that, why not use the weeklies? This goes back to what I was saying. You can target where you want to trade, and that makes a lot of sense. So this customer appears to be pretty bullish on this name, and this is a name that used to be a lot, and I mean a lot more expensive, and is not a further recovery in oil, and who knows where this sucker may go.
You can admit it. This was Carmen line. You can come out and say it, right, sir?
It was all me. That's what I'm after is oil pipe and exploration companies that and refiners. That's all we
masquerade as a Vol fund, but really you're slinging the refiners. We know what you're up to
exactly,
over there.
Exactly. I'm all over it. But yeah, this within the last year, this has been almost a 20, and a long time ago, this was like almost $100 stock. So who knows? This could be a pretty strong bet on this guy making a serious run.
Yeah, this guy obviously needs this thing to keep popping and popping pretty hard. It already popped pretty good today, so these calls are, like I said, are 30-odd cents to the good already. So he's looking all right on these, but he's got a little bit of time to run, not a ton. So if you're intrigued by Marathon, maybe take an eye out, take a peek at these and see what you feel about this recent run. Maybe you think it's overdone. This guy's crazy. Either way, it's worth noting at the very least. Let's move on to another name we've talked about a lot this year. It's been a few months. I think that's kind of our theme for the Odd Block today. Just been a few months since we checked in on this name as well. This is the Market Vectors Russia ETF, ticker symbol RSX, closing today $22 and about a quarter, up about 50 cents or a little over 2% on the day. This is the name that does, somewhere in the neighborhood of about 5,500 contracts a day. Today, doing about 7x that, about 35,000 contracts. Of that 35,000, about 30,000 and change coming in this one. I don't know, I guess you can call it a funky calendar, maybe a stupid. It kind of depends on the execution. These things are a little bit wonky sometimes, how they're put up. But it looks like on the surface here, we got maybe a bit of a stupid, nice little time stupid. It was the DEES 23, NOV 23 as well, but in the weeklies again, expiring on the 24th. So funky, if that is indeed the range that they chose for a time stupid, call it what you will, gives yourself about exactly a month out there. Interesting choice, about 15,000 of each, pretty much lifting the offer close to it on the DEES, also on the NOV as well. Again, this kind of size, the execution could be a little bit misleading. This could indeed be a spread. I might lean a little bit more that way just because the time stupids, you don't see them that often. But then again, sometimes we see people wanting to spread their deltas out a little bit, and there are some use cases for that. We've debated this before. We won't get into the great stupid debate again, but I may have to lean on this, maybe perhaps spreading. OI on both strikes is negligible, so it's opening pretty much across the board. Let's look at what's been up in RSX since we last checked in with these bad boys, and it's been as you guys know, a bit of a volatile year. They hit a low back, starting the year actually was where their low was, back in the 18 range. Getting as high recently as about 22.5, 23, pushing that range again. It's kind of been flirting with those levels kind of ever since. Looks like this paper, if it is indeed straight up as it appears on the surface, straight up stupid paper, which it could be, then looks like someone perhaps wanting this party to keep rocking and rolling. Mr. Meatball, where are you coming down this? You feeling spread or are you feeling stupid? And then what's your take on this one?
You don't really see a lot of time stupids.
No, that's why it caught our eye.
Yeah, probably not. And who knows? There might even. Did you see any stock involved? Because this seems like something that might have some stock somewhere, but you never know. I mean, a time stupid. I mean, crazier things have happened, but I don't think that's the case. I think this is just a spread.
I really just like saying time stupid. It's one of the reasons why we picked this one. But you're right. It doesn't. Time stupid is just so it would be so oddball of a use case that I have to lean against spread. Again, we've had Tubby on before. He's talked about some of the funky ways these types of things are facilitated and printed, and you can't just go by the prints, as you said before. And there was some stock. I'll have to dig up the exact numbers, not a ton, but still interesting stuff here. I'm going to lean on spread. Let us know your thoughts. We'll check the OI, obviously, because it's going to be opening. That much will tell us. We'll see how this one plays out. Got stupid, a month-wide, time stupid. That'd be an odd one. But again, it is the odd block. We've seen weirder things here, listeners, as we move on into our final name, our final victim here in the odd block. It would help if I typed the ticker incorrectly. There we go. This is our old friend, again, theme of the show today, a theme of the odd block at least. Old friends coming back to visit, coming back to play in the old odd block. Today's last name, Royal Caribbean Cruises, ticker symbol RCL, closing 125 and third, up about $2 or nearly 2% on the day. This is the name that's got earnings popping off tomorrow before the open. And so we saw some interesting paper going up there today. Lightened it up, not a ton, but a decent amount for this name. They only average about 4,000 contracts a day, doing a little more than 5x that today, doing about 23,000 out here today. So pretty active day, about 2-to-1 calls over puts. A lot of that coming as a result of what looks like a 1x2 out here in RCL. It was the Nove, straight up Nove, no funky expirations or weeklies this time. Just straight up Nove, 130, 135, 1x2 going up paper. Looks like coming in to gobble up, lifting offers are close to it on 3,500 of the Nove 130s, doing $2.15 for those. Turning right around and hitting the bid for 2 of the Nove 135s, doing it 7,000 times for 85 cents. Worth noting, there is some OI on the 135 strike to the tune of 11,000 and change. Not much OI at all, really, on the 130. So it is possible they are rolling the 2 down to the 1. And again, looking at where this name is trading here, it is trading today, closing. Even after today's rally, it only closed at 125. So it is the potential for rolling to a bit more relevant strike. 135 is not really in the ball game here, certainly not for earnings. 130's a little bit closer. So you can make that argument there as well. Let's look back at how this name's been faring since the last time we checked it out. It's got a similar chart to a lot of the names we're looking at. Kind of a big straight up arrow over the course of 2017. It kicked off the year at its lows around 75.5. And it hasn't quite doubled, but it's done a pretty good run throughout the year, topping out at around 127 back just a few weeks ago. And it seemed like it's flirting with, it's trying to hit those levels. In fact, it hit that level again today before coming off a little bit. So it's been a rocking and rolling pre-earnings day here in Royal Caribbean. Mr. Meatball, take us home here. What are you feeling on this 1x2 in Royal Caribbean? Are you feeling rolling down to a more relevant strike, or are you feeling someone's setting up for a nice little pop, but not too much of a pop ahead of earnings in RCL?
As I look at it, it's a weird number because there is a lot of open interest, but it'd be a lot cleaner if it was 5,000 by 10,000 than this sizing. This could just be its own trade, and this could just be a way of trying to cheaply get long Royal Caribbean. I think it might be that. I'm not 100% convinced this is a roll. It could be. As I look at the volume, you know what? I'm going to go out on a limb and say this is not a roll and this is its own trade. We'll see tomorrow, but this trade, the open interest appears to have gone up as in about a 10,000 lot contract on October 19th. So I think this might just be its own trade, and somebody is really likes RCL to go up, greater than 5%. So there you have it. We got a confident RCL trader here.
Yeah, got a little bit of love. You're right. The OI is funky. Usually, if you got adjustments and things, the 7,000 versus 11,000, obviously other people can pile into strikes. That's never, of course, the primary criteria, but it does raise a little bit of an eyebrow when it's the sizing is that kind of off. So yeah, it could be ahead of the news. You want someone nice, aggressive, but not super aggressive because again, he has net short units to the upside here, so he needs a nice pop, a nice 10 handle or so pop in RCL, which certainly make this guy happy. And or maybe let's say 8 to be safe out there. And he got $2 today, so not a bad run. He's poised. We shall see. We'll keep an eye on this one. We shall see how it turns out for him. Meanwhile, let's keep on rolling, see how it turns out for you guys, because it's time for the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody, welcome to the mail block. This is indeed the portion of the show where you guys take the reins. Questions, comments, insights, all that fun stuff. You know how to find us at Options on most of the major platforms, or questions at the Options Insider, or indeed just grab our mobile app. It's all baked in there. So if you don't use any of those, or if you listen live, you can always chime in that way as well. We asked you guys last week, everyone's got just crazy crypto on the brain these days. So we said, last week it hit that quote unquote 100 billion in market cap. Take that for what it's worth, obviously, but 100 billion in market cap for Bitcoin. So if you guys are always asking us if their options are available, A, the answer is no. B, we thought we'd ask you if the options were available, how would you trade these things right now? Gave you 4 choices. Would you buy the calls and the call spreads? Would you buy the puts and the put spreads? Would you sell the calls, aka covered calls? Or would you say, I don't like crypto, not my thing. 52% of you coming in on the bull side saying you want to get your hands on some Bitcoin calls or call spreads. So a sizable chunk, a majority of you guys out there lighting up the upside. Kind of gives us maybe a feel for how that skew would look. That's another question people have asked us. And I think that skew would look pretty upside heavy, upside-tastic, call it what you will, if these things are listed. Only 18% saying you're going to buy some puts or put spreads, tied almost with 17% of you saying you won't touch this with a 10-foot pole, and 13%. I thought this would get a little more traction. Only 13% saying they want to sell some covered calls. One of the complaints we hear about Bitcoin is that it's hard to get an exit. Covered call would do that for you. Only 13% saying they wanted some love for that. A couple people writing in, one guy saying broken wing flies, another guy saying, I don't know what that acronym even means, so who knows what he's saying there. But yeah, broken wing flies was a common suggestion as well if you want to get a little exotic with your Bitcoin options. Moving forward to this week, we're really quick. We mentioned earlier, Mr. Meatball and Mr. Uncle Mike, we were talking about will we see a 7 handle. I asked our audience here a little quick flash poll, quick one here on Twitter. We said, will we see a 7 handle in VIX this year? Yes, no, or they have no clue. What do you think is winning? Uncle Mike, we'll start with you.
I think they're going to say yes. I think that after some of the initial polling went in, I think we're going to say that the answer is yes.
Are you on that tip as well, or are you staying 8 handle and no farther?
No, I think I am on that tip right now. I'm going to go with the momentum. What the heck? Since I don't trade VIX, then I'll give you my expert opinion. 7 handle, why not?
Yeah, betting against a lower VIX has been a wrong trade for pretty much the entire year, so why should that trend change anytime? Mr. Rock, I almost said it. Mr. Meatball, what are you feeling? What do you think our listeners are feeling here?
Listen, I'll be honest. I think 8's going to happen. Like, we'll get an actual settle below 9. I think that'll happen. I don't think we're going to touch 7. I just think you would need. I mean, the level that S&P options would have to get to be a 7 vol. There would be no risk premium left in the options. I mean, right now, even weekly options in SPX have vols that are in the in the 5s and 6s, and VIX is still in the 9s. So I just don't see it. You would have, because one of the problems that you have, and this is what's going to hold VIX up, is that as volatility gets cheaper and cheaper, you're going to see skew get steeper and steeper. And so I just don't see how that realistically happens.
Yeah, our audience is so far not feeling it either. 2/3, 67% saying a whopping no. Only 22% on the two-saw downside train saying yes. 11% say they got no clue. And you got a little bit of time left, so if you want to pile into this one, we'll extend it. Maybe we'll have it go through till tomorrow, so you guys who listen after the fact can play along too. But so far, overwhelming majority out here saying no dice for the 7 handle. Let's move on to the actual question of the week that we were asking before we got derailed with all this 7 handle VIX nonsense. We said to you guys, hey, we've discussed this, we've debated this, we've told you pretty much flat out all the data says it's a coin flip when it comes to trading options during earnings, but we know you guys like to do it anyway. So given that's the case, what is your MO for trading options when it comes to earnings? Remember, we're talking about the event itself, not like the preamble, getting some long premium ahead of the event or trading a little post-event pop or crush, not things like that. We're talking riding over the falls in the earnings event itself. How do you guys play it? Do you buy calls or call spreads? Do you buy puts or put spreads? Are you on the dark side? Do you like to sell puts / put spreads? Or we flip the script. For the last one, we said, let's just go for all the wings. We'll shove them all together. So you got your flies, your iron flies, and your iron condors all in one choice. Could be long or short. We didn't specify, so you guys can pick your poison there. Let's go back once again to the land of St. Charles. Uncle Mike, what are you feeling, sir? And what do you think our audience is feeling?
Well, I think for me, if I were to do it, I'd pick a side and do a vertical, but I don't really do it that much. So the only time that I really do a lot with earnings is that if I have a sizable position on, I need to hedge before earnings. And my favorite way to do it, if I can do it, is by using a back spread in some way, shape, or form, vertical back spread, of course. And I think that that's my preferred medium. And I did it on Apple for years and talked about it on the show. We almost could have even had an Apple block back then, from what you guys can remember, I'm sure, as well. And my guess for our listeners is I will say that they are premium sellers.
So you have a write-in for vertical back spreads. I will put that out to our listeners so that you can see Uncle Mike's write-in here. When you only got 4 categories, we're kind of limited, but we told people, if you got others, write in, hit us up with what you guys would like us to see. We got one write-in, Uncle Mike, already for vertical back spreads. So there you go. Mr. Meatball, I know you don't like to do it, but we know people do it anyway. So what do you think our audience, how are they slinging the earnings these days?
Well, they are I'm gonna say call buyers. I'm gonna go, and as you know, when I do play earnings, it's butterfly straddles, not that's the only way I'll do it. But long premium type of trades. But I'm going to say that they're premium buyers.
Yeah, I thought we might be stacking the deck when we kind of lumped all the trades with wings into one choice, and that seems to be the case. 40% saying they want to sling long short flies, iron flies, or iron condors, followed by 30% coming from the dark side, selling puts or put spreads. Only 20% coming up on the light side, buying themselves some calls or call spreads, and only 10% wanting to touch some puts. Again, early days, this question just went live. It is our question of the week, so you got all week to play. If you haven't done so yet, get on over there before the getting's good. If you get in early, you can maybe help influence what other people are voting. If you get in late, it's kind of already set in stone. It's kind of hard to change the narrative. If you get in early, maybe you can influence some of the Johnny-come-latelys with your own vote. So get in there, add options, make your voice heard. Just like some questions from our folks like Upward Momentum. He wants to know how we suggest that we best use the most active options list. If you're not familiar with this, listeners, this is, of course, we put this data out every day on the Options Insider, as well as, of course, via our various social media feeds. You can grab it there as well. And what that is quite frankly, exactly what it says. It's the top 10 most active names and strikes for that day. So we'll break it down. Usually we'll do it at midday and an end of day. So we'll do it twice for you throughout the day, so you guys get a little bit of a flavor for what's lighting it up. And then, there's a lot of different ways you can use that. Some people like to use that just to kind of stay abreast of what's lighting up, what's trading that day. So you don't have to do the research. We do it for you. Others, it may be a little bit of a flag, an indicator to say, hey, something's popping off in this particular name, in this particular sector. I think I want to do a little bit more research into what that is. And the nice thing about it, too, is you break it down by strike, so you guys don't have to do the work yourself. You can actually look at the underlying and say, okay, it's actually these out-of-the-money calls in November that are lighting it up. I should go look specifically at those. So we like to think of it as more of an indicator of perhaps where you should be spending your time and your research. That's what's going on. A lot of people also like to use it as a bit of a refresher, see what's going on throughout the day. However you choose to use it, we don't hold it against you. There's no wrong way. I guess the only wrong way would be, hey, I see all these calls printing. I want to go buy those too instantly without doing any homework. That would be wrong. But if you do a little homework and analysis, you discover you really want to buy these, well, then maybe you still do a vertical and you sell that strike. But that's a conversation for another day. But still, that's kind of what we like to think of that use case for. It's kind of just, it's more information in your toolkit about what's trading that day, and you can use it to guide your analysis and some of your scanning going off. Here's a comment from our friend Ophir, who's been on the show before. He's just lamenting that there was no after-hours options trading for Tesla last week because he really wanted some. So there you go, the two of you. Both of you, I think, were very heavy on the nay for after-hours options trading, and Mr. Ophir lamenting there was none. So there you go. Take that, put that in your pipe and smoke it.
Well, I don't smoke.
Your bubble pipe, then. Your bubble pipe.
I don't either.
There you go. No, I just don't think I'm all for it if it would work, but I've just watched too many Fed announcements and too many big announcements happen during trading hours on things much bigger than Tesla, where the bid-ask spreads are 9 miles wide. And if we could get reasonable bid-ask spreads, I'm all for it, but I have to admit my skepticism of getting reasonable bid-ask spreads and getting decent fills is rather high, unfortunately.
Yeah,
I just don't. I agree with. I think people are wrong. They think they want it, but they don't. It's the classic case of it's a very Jurassic Park-like type event. In that just because you can doesn't mean you should.
The T-Rex is going to devour us all in the after-hours trading market.
Well, yeah, your after-hours trading will not be good. So I wouldn't. I think you're wasting your time, and I think that it's fun to think about, but it's a waste of time.
That might be our analogy of the week. After-hours options trading is the T-Rex of Jurassic Park that will devour you and all your ilk. So run for your lives. I like that. That's a good one. All right, let's see. Full Fox has got the standard question. We get a lot. We were just talking about these with the poll, so worth bringing it up again. I've weighed in on this before, so maybe I'll stay out of this fray. But he wants to know, you guys prefer iron condors or iron flies? He says, I know one strategy won't work every time, but what scenario is preferred? I've weighed in before. Like I said, I kind of fall in. I think it was our old pal Don Schlesinger on Volviews used to say, an iron condor is an iron butterfly for cowards. And I have always liked that saying, and I tend to agree with it to a large extent. If something is interesting enough, rich enough to draw your attention, a name where you really want to put on these types of trades, I like to do the iron fly because it's more about what you're looking at, which is at the money, and you're going to capture that move, you're going to capture that vol crush, whatever the case may be, the theta, whatever is bringing you to that name. Whereas the iron condor, it's a little bit more removed, it's a little bit more cushiony. I can see how people who want that, I'm not averse to it though. People who are a little bit more set it and forget it type traders, they don't have the time to babysit stuff as much. I think the cushion of an iron condor is better. It's kind of up to you and your tolerance and your ability to trade, I think, in terms of time. But I've always, if I'm going to do this, I usually if I'm going to go big or go home, and I like the iron fly as a result. Let's go around the horn the other way. Mr. Meatball, fly or condor, what say you, sir?
Fly.
All right, I think Don Schlesinger has infected us both. Let's see if Mr. Uncle Mike can break this onslaught of fly love. How you feeling, sir?
I've just seen too many people blow out their accounts with condors to really like the trade that much. All things equal, there's no inherent advantage or disadvantage to either of them if everything is equal and vol levels are equal and we live in a perfect world where everything is candy and nuts. But if in the real world, I have a much easier time working. Yes, you have more of a cushion with the iron condor, but you're going to get less reward. I would prefer trading less contracts and doing an iron fly and managing the trade personally. I think that's a better way to go. And I just have seen, I've done condors and I will do condors again if the volatility is right, if the situation's right. I think they're different tools, but typically in my toolbox, I'm going to go with the iron fly given the choice between the two of them.
All right, so a lot of love here for the iron flies. Again, no scenarios, no perfect panacea for every type of trading environment, but tends to, if the setup is favorable, it tends to be favorable for the iron fly. It makes a lot of sense to go that way. But again, to each their own. You can blow out either. There's no such thing as a safe iron condor either. As you can blow out either of these. So pay attention. A little bit closer to the fire with the iron fly though. So bear that in mind. All right, we got all kinds of questions. Let's wrap up on a dense, meaty one. Let's go here. Think Tank Trading. He says, I have a question regarding funds like VXX and this quote from its prospectus. And this quote says, in connection with these limits, the Dodd-Frank Act has required the CFTC to adopt regulations establishing a speculative position limits applicable to regulated futures and OTC derivatives and impose aggregate speculative position limits across regulated U.S. futures, OTC positions, and certain futures contracts traded on non-U.S. exchanges. That's a mouthful. Read that 5 times fast. It continues. In December 2016, the CFTC reproposed rules on position limits with respect to the 25 physical delivery commodities, futures, and options contracts as well. He goes on to ask, what happens with cheap low vol prices and this position limit, and they can't get the vol exposure needed to track the benchmarks, particularly when it comes to positive or inverse ETFs. One will have a massive margin lending / borrowing cost, and the other won't be allowed to buy more futures at some point. The second that happens, the NAV will be out of whack and become a closed-end fund with ARB to NAV opportunities, aka the death spiral. Wouldn't you agree? Or am I missing something? Thanks in advance. Asking for a friend. Ha ha ha. Just kidding. Yeah, so a lot to unpack here. But this is kind of, Mark, this is kind of like a spin on a question we get asked a lot on vol views usually, which is particularly when it comes to these funky ratios and inverse VIX ETPs. What's going to happen when they hit the fan? In this particular scenario, he's talking about position limits, and he does lay out a scenario that I suppose could theoretically happen. We got this crazy environment, vol super low, and yet these position limits are so strict that the fund can't quite keep track with what it needs to do in terms of tracking the underlying. So that's the case. Again, another one of these times when we say, maybe a little buyer beware out here. These prospectuses lay it all out in excruciatingly painful detail, as we just read. But if you can handle reading them without going to sleep, then there is a lot of interesting data over there. Mr. Meatball, we'll start with you. Are you as terrified of these position limits in these inverse VIX ETPs as our friend here is?
I think you have more to worry about. That scares me less than the management team that runs these. Do you remember what was it, like 5 years ago when TVIX broke for 2 weeks? And just because Credit Suisse had problems.
That's kind of the infamous example of this, yeah.
Yeah. I do think that's I think that's more related to the management team than actually the position limit issues. But yes, I think that that is a very legitimate concern. But again, I would be more concerned about the individual companies managing them properly than I would legal position limits, because most position limits are really set by the exchanges and can be waived. There's that.
Yeah, if it's breaking the fund, I think there's an argument to be made for maybe adjusting those limits. Mr. Uncle Mike, you said this gives you flashbacks here of UNG from a while back?
Yeah, about 10 years ago, maybe not 10 years ago, about 6 or 7 years ago, I know you went back when natural gas had its big run and everyone and their uncle was wanting to trade natural gas. UNG was very popular, and it's because of that I've purposely stayed away from UNG and USO from an investment standpoint, even though I like having exposure to nat gas and oil. I've talked about on the show a bunch on how I use XLE for that purpose and get stock exposure in that one instance for that reason. At some point, the way that Mark and Andrew describe a lot of these VIX products as predictably crappy, it's hard to manage. And I think that just as a retail trader, your solution, if you want to trade that type of thing directly, if you want to trade VIX directly, or natural gas or oil for that matter, I think the answer isn't necessarily to use those products. I would prefer to just trade options or futures on the VIX directly or on natural gas or oil directly. Now, if you're short and you want to do a predictably crappy trade, that's the option pit advanced technical term, then yeah, there's ways with which you can do the predictably crappy type trades. But having direct exposure to these things along with UNG and USO or oil or natural gas, I think you need to have an alternate. I think there's better ways of doing that, whether you're looking to be long or short, in how it is. I think that just with the way that you have future rolls, you have contango, you have backwardation, you have all those things factored in. If you don't have all that factored in when you're looking to trade it and know how the fund does it, how they want to do it, you might not be getting what you think you're going to get. So buyer beware is my thought on it.
Yeah, and we've said that many times. Go straight for the actual product itself whenever possible. Particularly if you're concerned about these things. RoboTrader Redux is concerned as well. He's chiming in saying there's a bull narrative out there that vol can't rise, but I've seen 2x moves in one day and 4x moves in 1 week events. That would be catastrophic to dealers of any of these ratio inverse ETFs. Yeah, we're with you. Read the prospectus. Very much buyer beware on these things. They get a little wonky. But what isn't wonky? It's our Around the Block segment.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, welcome to Around the Block. This is indeed the portion of the show where we break down what's popping off for the rest of the week, what we're keeping our eye on, all the crazy macro stuff still in play. As you mentioned, tomorrow before the bell, we got CBOE. Before they open, they're pricing in about a 3% move on their straddle, so just shy of $4. We also got, I think they're after the bell, yes, Snap after the bell tomorrow. They're pricing in about a $2 straddle, which on a $15 name is a pretty hefty move, about 13%. So maybe a little bit of action there. Later on this week, we still got Nvidia, Macys, Kohl's, JCPenney, Valeant, our old friend Valeant out there, a.k.a. the infamous strangle seller of Valeant. So a lot of different things to keep your eye on. Earnings season not done by a long shot. That said, let's go back around the horn. Uncle Mike, we'll start with you. What are you keeping an eye on this week, sir?
2,600 in SPX. I'm excited. I think we got a shot at getting it. Just another milestone number. I think that we got a shot at that by years, not necessarily, but not by year's end, possibly tomorrow by day's end. So I am laser focused on that number. Crude oil approaching the 60 mark. So we have a lot of things that are getting closer to key numbers, I believe. And I'm looking at macro news, but, well, let's face it, macro news seems to mean nothing these days.
Yes, the Viceroy, who actually, if he were on, I do believe he may be making a return appearance sometime soon, so mark that in your calendars, listener. He'd be very sad to hear us dismissing micro like that. Maybe we'll put it to him if we get a chance to talk to him again soon. Mr. Meatball, same question for you, sir. What are you watching the rest of this week?
We got some earnings left. So that's about it. A little bit of earnings. We've got the president over across the way. Will there be a North Korea nuke or something like that they test? Who knows? But I'm just looking see if there's anything geopolitical. But for the most part, just kind of the end of earnings.
I know all your hardcores, your mentees in the pit chat, they love themselves some earnings. We all kind of do. It's just fun. All right. Speaking of things, let's pay off really quick as the music kicks us out the door here. Real quick flash poll here in VIX. Looks like people are getting stronger, more strident in their no answers. Up to 70% now saying no way, no how. A 7 handle this year in VIX. Only 20% for yes, 10% saying they ain't got no clue. We got a clue. Let's check around the horn one last time before we go. Let's start with the Meatball. Mr. Meatball, what's cooking in the land of all things option pit?
Keep your eyes out. We should be having Andrew's Easy VIX course coming up in the next couple of days or so.
Is that easy like E and Z, or are you spelling it the real way?
We're going to do it the cheesy E-Z way.
Easy VIX. There you go. Head on. How did I know you were going that way? Head on over to optionpit.com. Get yourself some easy VIX learning on. And last but not least, Mr. Uncle Mike, if I'm intrigued by, let's say, maybe skipping out on those oh-so-pervasive ticket charges, or maybe I just want to sling some skew, where should I go? What should I do?
Oh, by all means, give me a call. If you hate that ticket charge, it drives you insane that you would normally want to close out a trade for 35 cents instead of having to pay the $9 ticket charge or whatever it is. Give me a call. I might be able to help you. 312-212-3531. And for the easiness, I'm sure Andrew's class, it's easy, rocking nonstop on the radio, coming at all y'all in stereo. Like the man Easy E, and that is it for today.
You're all fired up today. I love it. Need to keep this energy level for the strategy block on Thursday. Meanwhile, listeners, we'll see you all then for a little more of the option block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.